What's up, everybody? Happy Sunday. I hope you guys are doing good. Again, as always, dad up. It's hard to be a father. It's easy to be a sperm donor. Today, I want to talk about a comical situation in the stock market, specifically for the stock we know as PayPal stock, ticker symbol PYPL. Currently, PayPal just hit a 52-week low. For the year, PayPal is down 33%. It's down 21% year to date. It's down 36% over the course of the last 5 years. And it's literally the same price that it was in July 2017. And it's only up 52% from its inception when it went public in 2015. Currently trading at $57.88. In today's video, I'm going to tell you why this is comical and not sad. Also, I will tell you why I believe truly 100% in my heart, and I'm putting my money where my mouth is, that PayPal at the very least is going to do a 2x from where we are right now. And they don't really need to do much in order to do that. The market just needs to wake up and understand that PayPal is not a dead company. It just very much is not growing as fast. You see, PayPal actually grew last quarter at 7%. PayPal is estimating that they're going to grow 8% this year. Next year, I think things are going to start looking up to PayPal, for PayPal, and I think they're going to be growing at very low double digits. PayPal just got a brand new CEO. Dan Schulman, who was the CEO from 2015 till now, is leaving at the end of this month. The new CEO is called Alex Chris, and he's coming from Intuit. He actually he was a senior vice president of small businesses in Intuit, which was, I believe, 51 or 52% of the total revenue of Intuit. So he is definitely the right man for the job. But let me explain to you why I believe that PayPal is at least a two-bagger from where we are right now. So if you invest $100, I believe that you are going to make $100 on top, and it's going to be worth $200 by 2025. Now, before I go, let me just say this is not financial advice, purely entertainment. This is just my own opinions, and you guys should do your own due diligence. Don't listen to any YouTubers or social media influencers, specifically and including myself, and that goes for anybody. We're just here to give you a stepping stone, an idea at best. But let me give you my thesis of why I think this is absolutely comical. And you might say, well, Adam, why is everything comical if PayPal is doing so bad? PayPal is literally down 36% over the last 5 years, and it's literally only up 50% since 2015. That's absolutely freaking terrible. That's less than double-digit growth every single year. The S&P 500 beat out PayPal. The reason why it's comical is this is a tremendous, tremendous opportunity for people to get into PayPal at these bottom dollar prices. Now, I don't know if PayPal is going to go any lower, but in reality, it does not matter. If it goes lower, buy more. I have a shit ton of cash secured puts on the line right now to buy up. I think I have 500 shares on the line, so 5 contracts for cash secured puts, and I just bought another 100 leap contracts for PayPal for 2025 January 145 strike. So there's something called a PE, and a PE ratio normally is trailing 12 months, and then you have a forward PE ratio. And a PE ratio is a price to earnings. You don't really need to understand it, but it's as simple as that. It's price to earnings ratio. But this is essentially the multiple that Wall Street and analysts give a stock price based on the company, the growth, the revenue, and the future of the company. Then there's something called a historic PE, and then there's something called a current PE. Based on the PE, just the PE, PayPal is a two-bagger for me, and I'll explain to you why. Currently, the PE is 16. The last time that PayPal's price was $57, $58 was in July 2017. So let's call it summer 2017. At that point, the PE was 45. So just remember, the price is flat from where it was around 6 years ago. However, The price to earnings ratio is actually down. It was 3 times higher than where it was today. It was 3 times higher back in 2017. So you might say, well, Adam, the company's not the same. It's not earning as much. Well, then you have another metric called earnings per share. And that is literally the amount of earnings you do per every single share outstanding. Again, you don't really need to understand it, but it's pretty straightforward. If today the multiple that the company is getting is a third of the multiple it was getting in 2017, this is way before COVID, you might want to ask yourself, well, Adam, that means that the revenue that they're getting today is probably also a third of where it was in 2017. And to this, you would be extremely right in your logical thinking, but very wrong in actuality. You see, while the PE today is 16 and the PE back in 2017 was 45, the earnings per share today is $3.57 per share. But the earnings in summer of 2017, the same time we had the same price of $57, $58 back 6+ years ago, the earnings per share was only $1.28. So just understand that. Look at this chart for it to make more sense. The earnings per share today is 3 times more than it was in 2017 with the same share price as we have today. However, the PE multiple today is only a third of where it was in 2017. So essentially, from what you saw from the chart, it changed. So earnings per share went up. However, PE went down. Because of this inverse, something is wrong here. And what's wrong is people think PayPal is dead and it's not growing anymore. That is not the case. I will be 100% honest with you. PayPal is not the behemoth that it once was. I don't think PayPal is going to hit $300 a share. I've been saying this for quite a while. I think low triple digits around that 120 mark is a sweet spot for PayPal, where PayPal needs to be. And I believe that's where PayPal is going to be. The historic PE for PayPal is right around that low 40 mark. Now, you might say, well, Adam, COVID, this and that. During COVID, the PE went to like 60 something. So let's not even talk about that. If the PE goes from 16 to 32, if it just doubles, which would still only be around 60% of where it used to be, well, the price is going to double. The price is going to go from that 57, 58 to right around that 115, 120 range. The forward PE. So you have regular PE, which is trailing 12 months, TTM, if you ever see that term, that's what it means. Then you have something called a forward PE. A forward PE is price to earnings based on future growth and future revenue. And that PE is even more disgusting at literally a 10.2. In terms of PE and valuation, PayPal has never, ever been so cheap as it is today. You are literally getting the best possible value in PayPal ever. Now, this is a 60-something billion dollar company. This company is known throughout the world. It is the number one payment processor online. It's absolutely crazy. There's a lot of debate that Apple Pay, Google Pay, Amazon Pay, all these pays are going to take PayPal's lunch. In reality, they've been around for half a decade now. They didn't take the lunch. PayPal is still growing at a massive number. PayPal will continue to grow in the low double digits. But here's the kicker. New CEO. He's going to be in the next earnings call. We already know by I believe she's the interim CFO. Her name is Gabriella, or interim CTO, CFO, I believe. She went on a podcast, I believe, for Goldman Sachs or UBS. I don't remember. I have it on my channel. She said that next quarter, our transaction margins are going to go down again. But quarter 4, we will have an inflection point. That's why I believe quarter 4 of 2023, it's going to start turning. In 2024, it's all going to go up. That's my belief. That's barring anything that can happen throughout the world and, a global recession. Of course, we can't take that into account. At least I cannot take that into account. So I'm going to just talk about what I think is going to happen. So now, where is PayPal going wrong? What's the problem with PayPal? Why is it not growing like where PayPal should be growing, right? PayPal makes money through essentially different types of various ways. They have branded and unbranded. Branded is very simple. PayPal, when you go to checkout, you see PayPal. They make a lot of margins. Unbranded is something called Braintree, where companies like Booking.com and Uber and a host of different type of companies that you know and you use every single day in and day out are using essentially PayPal, but they wrap it in their own logos and their own branding. The market for this, the margins, is extremely, extremely small. And PayPal is essentially, I believe, the second largest or the first largest when it comes to this, but there's only really 3 players. PayPal is expanding globally right now. I believe they're expanding in 2024 to 27 different markets. That's 27 different countries, regions. The lowest margins they're ever going to get on Braintree is in the United States, which means they're hitting the low. And I believe in 24, once they keep expanding different markets, that their profit margins are going to go up. Specifically, their transaction profit margins. Guys, PayPal literally brought in $30 billion of revenue this year, or projected $30 billion of revenue this year. In 2017, they brought in $13 billion. Just listen to the numbers that I'm giving you. If you think that I'm like crazy, it's absolutely absurd and comical at this point what a crazy value PayPal is. Now, I could be completely wrong, so I'm going to give everyone a fair warning. I might be completely wrong. I might not make any money, and I'm not telling you to follow my footsteps. I'm just giving you guys pure entertainment and maybe some education that you guys should do your own analysis. Now, there's different ways to analyze a company. This is one way. What I'm doing today is literally analyzing a company live. You guys should analyze in your specific way. Somebody in the comments today asked me, hey, Adam, are you worried about the debt of PayPal, debt to book? And I believe they said that the debt to book is 70%. I'm not sure if that's true or not, but I want to give you a statement of what I told the person. Now, I didn't verify if that's the numbers. I have zero concern about the debt or how much money PayPal has. Their free cash flow is $5 billion. They bought back $5 billion of shares last year. They're buying back $5 billion of shares next year, and they're buying this year $5 billion. I believe they already bought 2 or 3 billion. They will be buying another 2 or 3 billion, totaling $5 billion. They have money coming out their ass. No worries about PayPal and debt or money, so on and so forth. They are a cash cow. For this, I'm going to say PayPal is not going anywhere. Between the new CEO, I believe a bottom is definitely forming right now, at least in my opinion, and they're moving into the stable coin. Now, I'm kind of a crypto head, so I won't go into it very much, but this just gives them the opportunity to onboard more businesses through this stable coin and be able to get a lot of generating revenue on the money that people exchange USD for the stable coin. They're going to use that exchange, that USD, and they're going to make interest on it. They're going to loan it out, so on and so forth. Not to mention, they give it very lucrative, I believe, 4.5% on their savings account, which people don't know about. There's also a lot of growth factors, for example, Venmo, and I truly do believe that there's a lot of other things that PayPal is going to get into in the future. Guys, thank you so much. I appreciate you. Please give me the likes. Please give me the shares. Please give me the subscribe. And if you're rocking with me and you really want to support my channel and you want to learn more about options trading, not just leap options, but my strategy of my wheel strategy where I do cash secured puts and I do covered calls, I have membership down below. It's $3 a month. I promise you're going to get your money's worth. I put in a lot of content and work for my channel members. Thank you very much for all my channel members who are rocking me. And if you don't care about the additional content and you just want to support me, buy me a cup of coffee. It's $3 a month. Enjoy the rest of your day. That up, motherfuckers.